to manage the risk. Also, it generates a stability, improve your long-term outcomes, and while building and well balancing this portfolio, it is very, very important to understand the client's need. So let's get started without a further ado. So, okay, so I think let's go to the second slide. So I think second is also done. So yeah, so the introduction is done. Let's move to the third one. Yeah. So this is the most common question I believe in everybody's mind, right? Where should we invest? Whether it is 1 lakh rupee or a 5 lakh rupee or a 10 lakh rupee or a 15 lakh rupee. It can be any amount, right? But this is the most common question which appears in everybody's mind. So here, what we have to do we have a straight answer to this? I just wanted to make this session little interactive. So I feel, okay, so yeah, for the confidentiality purpose, I think we have kept the mics and cameras off, sorry. But I think we all can use the chat box to the optimum. So let's interact through the chat box. I would like to read some of the answers here. So if I'm asking you, where should you invest? Do you have a straight answer to this? Let's type here in yes or no. Can I get some answers? Okay. So there are few people who wrote no. Okay. Snigdha have written no. Okay. Chahat have written no. Nikita no. You guys are absolutely right. So there is no straight answer to it. You know what is the reason why there is no straight answer to it? Coming into any outcome, what we have to take in consideration, there are few things. So the first one and a very important one is goals. If your goals are not defined, you cannot reach through the correct answer for the same. So first one is goal. Second one is the risk appetite. You must know your client's risk appetite, whether he's worthy taking the risk or not. And the third and a very important one is the time horizon. So before giving any answer to your client, you must know these three details from your client. So first one is goal, second is the risk appetite, and the third one is your investment horizon. If you're getting a right answer for all the above three, then definitely you can reach up to some conclusion. Still, you have to find too many things, too many elements are missing in this. But I believe these are the three things which is primarily important to know from your client before providing any answer on the question. Can we move to the next slide? So I have highlighted one word which is asset allocation. How many of you know what asset allocation actually means and why it is important? So primarily, there are two reasons of it. So first one is why asset allocation is important. So the primary reason is to minimize the risk, right? If say, for example, if I'm giving you a simple basic example, if I'm having 10 eggs and kept in a different basket, if somebody steals one basket, still I have 9 baskets to manage, right? So likewise, if you have multiple thing in your portfolio and if some asset classes are not performing well, still you will end up having a good profit in your portfolio. So which is why the diversification is very, very important. So when we talk about asset allocation, the diversification is one thing which comes along. Now coming to how many asset classes that we have. So the first one which you see on the screen is equity. Second one is debt, which again carries all the fixed income instrument, and equity is one thing which comes with the mindset of uncertainty, right? The moment we hear this word equity, everybody is having that notion in mind that the income which is going to come our way is going to be uncertain. Likewise, debt provide us the stability, safety, and peace of mind. Why? Because the income which is going to come our way is fixed in nature. Gold. So nowadays, this has been a very prominent player. I'm sure all of you must be carrying gold in some or the other forms, and it have become a very strong component in the markets. So definitely, this is one asset class who have picked up really well in last 1 year. Then after real estate, yes, again tangible property assets. And the last one, not the least, is the alternates. So this is beyond traditional markets. This is one product which offers you the diversification and diversity also. Okay, moving to another slide, equity. So this is one component. What does it mean, first of all? So when you invest in equity, means you are buying a particular share of that company. So it means you become a part owner of that particular company. As a company grows and the profit increases, you also get the share of it, and vice versa. If company is going into loss, you might have to bear the loss as well. So it is either way situation. It is not always that you earn profit, but many a time you also have to be a contributor to the losses as well. So there's a two-way to it. What are the key characteristics of the same? So potential return. If you compare this asset class with any other asset classes, I'm sure equity is one such asset class which gives you higher return than the others. So debt is not giving you as much as equity is providing you, and no other asset classes is as better than equity. So whenever you are investing in equity, you also have to keep a hold with this asset class. So it is not that it is giving you a short term income. For here, whenever you are investing in equity, you have to stay for long term. Now, the next asset class is debt, which provides you steady and predictable returns. So there are many components to it. First one is fixed deposit. I'm sure all of you must have heard about fixed deposit, and many of you must have also invested in fixed deposit. So it is basically offered by either banks or corporates or NBFCs, and the returns are between the range of 6 to 10%. So here, whenever you are keeping your money or allocating your money in fixed deposit, your investments are safe, and also it is getting you assured returns. The second one is the government bond. So government is also issuing a bond, be it a central or a state government, and virtually zero default risk. So if you see RBI floating rate bonds, it is one of the most secured element considered. Whenever you are investing in this category of bond, I'm sure it is going to give you a very good returns. Debt mutual fund is one of the other components, whereas if you see the pull of investment in the baskets of bond, the best part about investing in debt mutual fund is that if you have short term goals, you have different productile for the same. If you have long term goals, you have different product and schemes for the same. So of course, it is going to give you a better diversification there. Moving to another slide, the third component, which is gold, as I've already mentioned about it. So gold is one such element which is every individual's favorite, I think, because gold is something which is not just for the investment purpose. Somewhere or the other, we are mentally and emotionally connected with this asset class. So I'm sure all our ancestors must be having golds in the form of jewelry, coins, ornaments. So this is how we are emotionally connected with the gold, and this is not just the only way of keeping gold. The gold is being kept in four different ways apart from physical gold. So the first one is SGB. SGB is known as sovereign gold bond, whereas it is issued by RBI. And what you earn on this every year, so every year you're getting 2.5% interest appreciation. and plus the price appreciation. So whatever price appreciates, you get the benefit of the same. And apart from that, you are getting yearly interest 2.5%. Apart from that, we have gold ETF, which can be easily traded on the stock exchange like shares. Then after we have digital gold, so you can buy in a small quantities via this different applications. And the fourth one and a very important one is the physical gold. So as I've already mentioned, people are keeping it in a form of jewelry, coins, and there are other alternates for the same. So apart from gold, we have another asset class. Just move to another slide. Yeah. So another asset class we have is the real estate. It's a tangible wealth and long-term horizon. So real estate involves investing in physical property such as residential, commercial, or it can be a piece of land. It is one of the India's most popular long-term wealth building tools. So, say for example, if somebody who have bought the property in 2000 and now they are selling the property in 2026, look at the appreciation. It is giving you such a good appreciation for your property if you have taken it in a good area, right area. So, first of all, while buying this property or while putting the allocation in real estate, what you have to see is where is you are getting a good rental income, okay? Because that itself will give you the regular cash flow. Okay, so simultaneously, I can answer some of the questions which is coming in the chat box. Ma'am, can we invest in SDB in today's market? Okay, so only in case if it is available, because this was issued by RBI earlier. Nowadays, there are no tranches coming for sovereign gold bond. So right now, the opportunity is not there with you. But as soon as it is there in the market, yes, you can buy it from the market as well. Kamal is asking, sovereign gold bond is no longer issued. Yeah, so I think Kamal is providing an answer to Snigdha that right now the sovereign gold bonds are not available in the market. So if the SGBs are available in the market, you can surely go and buy it from the market. So another one which I was explaining is long-term capital appreciation in the growing cities. So yes, if you are finding the right area for yourself, then definitely if you are investing in the growing cities, you are going to get a long-term benefit, long-term capital appreciation benefit on the same. And also the tax benefit on home loan interest under section 24. And what are the cons? So of course everything comes with the pros and cons. So here are the pros which we have discussed. There are certain cons also. So it requires very large upfront capital. So usually the property which you buy, even if you're buying the smallest property, one room kitchen, nowadays in Mumbai is costing you around 50 to 60 lakhs, right? So this requires a huge upfront capital in one go. Second one, low liquidity. It cannot be sold quickly in an emergency. So if somebody is having a cash crunch or having a financial need or financial contingency at that point in time, this is one of the lowest liquidity product that we have because you cannot sell the property as quickly as possible. It definitely takes time. The paperwork takes time. The agreement building takes time. So this is not at all a low liquidity product. High transaction cost, stamp duty, registration, brokerages. So these are the high transaction cost which are definitely involved while buying the property. Subject to regulatory and legal complexities. So yes, there are certain legal complexities are there. So if you're buying a property, you have to see that the place is legally the place is legally bounded or not. If not, then definitely you may have to bear certain consequences also. So you have to be extremely careful while buying the property, real estate. Okay, so frankly speaking, alternate investment is not my area. So, Arun, if you wanted to contribute something to this slide, please intervene in between wherever it is required. So,
Sure.
startups and yeah, so startups and P2P lending is one thing, whereas platforms like Lend and Club allows lending to individuals. High return potential is somewhere nearby 10 to 12%, but higher default risk is there. Art and collabilities. So basically, here the platforms like UB and Grip Invest offers fractional ownership in invoices, leases, and art. So niche but growing in India. So yes, this is again a steady growth. So right now it have not grown to that level, but slowly and steadily it is growing in India. This is basically targeting the niche audience. InvITs and AIFs, yes, this is one sector which is prominently showing its mark in the investment trust and the alternate investment fund for slightly higher and surplus. So here you may think of earning the returns potential around 14 to 17% also. So Arun, if you would like to contribute something to the slide, please take it ahead.
Sure, sure.
Sure.
So, guys, technically, the moment you say alternate, okay, it generally means that it is not mainstream. Okay, so in mainstream, the asset class, we talk about equity, we talk about debt, maybe we talk about gold also and real estate as well. But alternate is something which is apart from this, right? Now, these are something which are upcoming right now. It is not something which is already there, and we do not advise all clients to get into alternates unless they have taken care of their needs and with the basic other mainstream asset classes. Okay, so once these are only suitable for people who has already done equity, who has already done debt, and then they ask you what is next, right? There are lot of clients, they come back and say na ki mutual fund ho gaya, insurance ho gaya, FD ho gaya, everything is done, what next? They are looking at something where they can diversify further, right? So alternate investment is for them. Yes, alternate investments are riskier than mainstream investments. They are relatively riskier than the mainstream investments. Okay, so so even if you talk about private equity fund, you talk about venture capital fund, right? They all come under alternate assets. You talk about unlisted equities, right? So they all carry higher risk. Is that clear? All right.
Absolutely. Yeah. So moving to another slide. Thank you, Varun, for throwing light on the same. So yes, these are the comparison of the asset classes. Here we are not promoting or pushing any one asset class. See, for a right balance in your portfolio, all the asset classes in the right weightage is very, very important. So the first one, if you see in the list, is equity. What are the expected returns in the equity for long term? So approximately, if you're keeping your time horizon for 5 years or to 10 years, you are definitely going to earn uh, above 12%, I would say. Here we have return 10 to 12%. These are the conservative return. But as soon as you are spending more time in the equity market, I'm sure these returns are going to double. Risk level. So, yes, of course, this is market linked. So, the risk is high. Liquidity. So, yes, this is a highly liquidate product. And what is the minimum investment amount? So there are two ways of investing in equity market. So if we are considering the mutual fund, so mutual fund, the entry for SIP is 500 rupees. And if you are investing through lump sum investment, one time investment, which is 5,000 rupees. So minimum is 5,000, and then after you can do the additional top up of 1,000 rupees as well. And what is the best horizon of investing in the equity market? So it is usually 5 years plus. Usually we say to go for a long term, and when I say long term means really long term, minimum 10 years horizon. But if not, then definitely minimum it should be 5 years. Second asset class is the debt. So here the returns are slightly conservative in nature because they are giving you fixed income, right? So 6 to 7% is the expected return. What is the risk level? So risk is low because it has nothing to do with the equity market. There is no volatility. There is fixed income in nature, so which is why the risk is low. Liquidity, medium. What is the minimum investment amount? So it differs from one product to another product. So for fixed deposit, it is 10,000. And again, in the fixed deposit also, it depends on company to company. Mahindra is entertaining 15,000, Bajaj is entertaining 20,000. Likewise, there are multiple companies in fixed deposit which is providing you this balance. And what is the best time horizon for keeping the funds in fixed deposit? So it is between 1 year to 3 years time. Gold. So yes, gold is also providing you the expected return up to 7 to 8%. Again, the risk level is medium. Liquidity, again, high liquidity product. Minimum investment. So yes, through the digital platform, you can even buy 100 rupees gold as well. And what is the best time horizon? So again, 3 to 5 years. Real estate is giving you the expected return approximately 8 to 12 years. Again, the risk level is very, very high. As we have already seen, there is no liquidity provided, right? In real estate, if tomorrow you wanted to sell the property, can you do that? The answer is no, right? So, which is why it is highly, the risk level is high. Liquidity, so it's a very low liquidity product, and minimum investment is approximately 20 lakhs. And what is the best time horizon? So once you're buying a property, then ideally you should be keeping it for 7 to 10 years to let your property's price go up. Alternates. So yes, again, the expected return is far more better than the equity also, but again, the risk is also very, very high. The liquidity is low to medium. And what is the minimum amount that you can invest with? So it is 10 lakhs. And what is the ideal amount? What is the ideal period or the horizon that you should be keeping it for? So 5 to 7 years. Moving to another one, right asset for the right goal. How do you analyze this thing? So, what you have to do basically, match your asset class to your goals. Nothing will work in your favor unless and until your goals are not clear. So, if, say, for example, somebody comes with an approach of selling me something, right? But if I have my goals clear in my mind that I wanted to buy a BMW car in next 5 years. So, what I have to do, I have to do the asset allocation likewise so that within 5 years point in time I achieve my goal. So for that, what you have to do, so we have created a small baskets for the same. So if somebody who is having a short term goal which is between 1 year to 2 years time, use the debt instruments more. Why? Because there is always a cyclical channel involved in the equity market. If you're keeping the equity exposure high, you end up making losses. So it's very, very important to understand and analyze the situation. And then after asset classes, and then after you have to match your asset classes with your goal. So here, what you can do is use the debt instruments like fixed deposit, liquid mutual funds, short-term bonds, and capital safety and liquidity are the paramount to it. While if somebody is having a medium-term goal, like me, as I've mentioned that I wanted to buy a BMW car in next 5 years. So if I have this goal at place where I should be investing, so use gold, balanced hybrid funds, or debt plus equity mix, and balance growth with stability. So here you have to give a good mix of equity and debt both, so that one keeps your portfolio growing and other keeps your portfolio steady and stable. Then the third one is a really long term. So if we are talking about long term, it is 5 year plus, or usually it is 7 year plus. So use equity at that point in time. You can either invest directly in stocks, index fund, or equity mutual fund via SIP. Time in market beats timing the market. So this is one proverb we always have heard about the market. You cannot time the market, right? Nobody knows when market is going to take upward momentum, when market is going to decline. So at that point in time, the best solution is stay invested in market for long term through SIP. Do not stop your SIP. Do not hold your SIP. Just keep increasing your SIP. One mistake people tends to make with the SIP is that every year your salary increases, right? But the SIP amount still stays constant. So what you should do basically, if you are getting an increment of 10% or 15% year on year, at least you should be increasing your SIP by 10% or 5 to 10%, between 5 to 10%. That is the ideal upgradation that you should be doing in the SIP.
Sorry
The
to
fourth,
interrupt, Disha. I think there is
absolutely. No, no,
noise.
please
There
keep
is some
adding.
noise, I think, coming at the back.
Okay,
So I'll just try to unmute everyone.
sure, sure, sure.
Mute everyone and then unmute you.
Yeah,
Now I think
okay,
it's okay.
thanks. Yeah, thanks, Arun. Yeah, pretty clear now. So the fourth one is the wealth storage. Use real estate and REITs for a really long-term tangible wealth. Gold as a safety net layer. So basically, whenever you want to go for a wealth building at that point in time, I think the real estate and REIT is a probably one of the best solutions that you have. And also, you should be having gold in your bucket so that your safety net is prepared. Another one. So here we are presenting you one case study, which is basically about buying a car. So as I have already provided you the example that if somebody wishes to buy a car, what do you have to ideally do? We all have to do is the saving, right? We don't have any other solution apart from savings. So if you are doing a right and proper amount of saving for buying a car in next 3 years. So here we have taken an example of a girl whose name is Priya, who is a 26 years old and who is a software professional in Bangalore. She wants to buy a car worth 8 lakh in 3 years. Now, right now, how much she is having to invest? So, 5 lakh she has invested today. What should she choose? So, again, if you are going back to the earlier slide, whereas we have already mentioned the tenure, right? So, 3 to 5 years, ideally, still you should be taking a blend of both equity and debt, but you should be taking a higher allocation of debt. So, here, if you are completely reliable on equity investments, you end up making a loss because there are cyclical changes every market goes through. So here, what you have to do is you have invested 5 lakh rupees today, so you have to take a debt as an option because that can be a correct choice for you because it gives you a fixed income. So a fixed deposit or a short-term debt mutual fund at a 7% per annum grows 5 lakh to approximately 6.1 lakh in 3 years. So predictably, it is the safest investment that you can make. Moving to another slide. Arun, can we go to another slide? Yeah. So the common investing mistakes we must avoid. What are these mistakes that we must avoid on a daily basis? Investing without understanding. So, which is why I would emphasize on one thing which you all can take a help of is IAP. Whenever you get an opportunity to sit for the IAP, IAP is basically the Investor Awareness Program. So, government have taken this initiative of giving this privilege to the AMCs. AMCs are asset management companies, so basically, all these companies are having the indicative budgets with them. They have to utilize this budget on the client education. So whenever you are getting the opportunity to sit in the IIP, I think it's a very good opportunity for all of you to know about the market. If you don't have the correct knowledge about the investments, then definitely you'll end up taking a wrong investment. So buying a product just because somebody have recommended you is absolutely a bad choice. So without knowing the returns, what are the risk involved in the particular product or what is the lock-in in the particular product, are these things matching with your goals or not? If not, then definitely you should not go for investing without understanding. First, understand from your partner, from your client, and then take a corrective steps for the same. The second mistake which people tends to make is following trends and tips, which is again a very wrong thing. So there are multiple applications available nowadays. People are just blindly following these applications. If these applications are showing that today you must buy Infosys or today you must buy Reliance, and likewise, if you are taking a call about the companies, then your decision may go wrong. So this is a very wrong thing to do. So basically, while following the trends and tips, you must also read the company and its financials also, because that is the one thing which gives you the clear picture about the company, how much the company's profit, how much the company's liability is, then what is the PAT, profit after tax, every detail you should be reading, and then after you should be taking the decision. And the third mistake which people tends to make is over diversification. See, many a time it happens while we are sitting with the client, your client is showing you that they have multiple schemes in their portfolio. Sometimes it is not required. You just have to make your portfolio well diversified. It should not be over diversified. You should not be investing in 35 schemes, 40 schemes. It should be prominently 3 to 5 instruments or assets you must be taking in consideration, and accordingly each asset classes should be having 2 schemes each, and likewise you must invest. So 6 to 7 scheme allocation is just fine for you. Moving to another slide. Yeah. So the activity map your goals to asset. So this is one very important slide. So before investing a single rupee, you first have to take 10 minutes to complete this exercise. This is very, very important. So it will definitely bring a clarity to your goals and also to your investing style. So the first one is list your financial goals. So before investing anywhere else, what you have to do, you have to first assign your goals. There are many a time while interacting with the clients or with the individual, they themselves are not aware about their goals. So it is very, very important for one to realize their goal. So just note down, take a pen and paper, just note down 3 to 5 goals. Be specific. Say, for example, if you wanted to buy a laptop in next 1 year, if you wanted to retire at the age of 57, 58, whatever it is, and at that point in time, how much corpus that you require. Then after 5 years down the line, you wanted to get married. You How you wanted to get married is also the question, because nowadays we are all living in the reels area, right? We are not living in a real era, we are living in a real era. So everybody wants a fancy wedding at that point in time, how much it is going to cost you, every detail minutely you have to figure out, you have to mention in it. Second thing, what you have to do is you have to assign a timeline to each of this goal, right? So say for example, label your goal whether it's a short term or a medium term or a long term goal, and likewise you have to assign the timeline to each of this. Third one is match goals to asset classes. So here, how you have to sync your goals with. So what you have to do is primarily you have to prepare a framework for this presentation. So the short, debt, medium, gold, and hybrid long equity. Okay, so this is how basically you have to prepare. What are your short term goals includes? So debt and medium term investments. Then medium term investment includes gold, and then the hybrid, then the long term one will include the equity, and the last one, which is the real estate and alternatives, which is basically the wealth storage. So basically, all these are very, very important. So once you are clear with your goals, what you have to do, you have to match it with the respective asset classes. and then you have to review, rebalance, and you have to keep churning. So it is not that you have aligned your goal and then after you have invested and then you are not seeing your investments at all. What you have to do, you have to keep reviewing your investment. If equity is not performing well, then again you have to maybe reshuffle a portfolio a bit, or you have to churn your portfolio a bit. Some or the other way, you have to reallocate the weightage also. Say for example, your equity allocation is 40% and rest of the allocation is 20, 20, 20 each. At that point in time, you might have to rebalance it well and review the portfolio accordingly. So likewise, you have to work in that panel. Moving to another slide. Uh, Arunji, you wanted to add something here?
Yeah.
Whenever
So
you require, yeah, please.
yeah. So guys, basically, from the session one we started, we kind of touched base on the foundation part of it. We also understood goal setting, and we talked about the having clarity about whatever goals we all have, right? We also spoke about the cash flows and budgeting part of it to prepare our own plan so that we understand the money and we give direction to the money what we have. We also spoke about compounding. We also spoke about SIP calculation. So each of you are now very, very sure of how to identify a goal, how to list down the goal. Some of you have already done those exercise yourself, right? So you are able to set your goals. You are having the clarity with each of your goals. You understand, how are you achieving it with respect to SIP, right? You have also done the session on. We have already done the session on risk assessment. So in risk assessment what exactly we are doing in profiling, right? So I think a lot of you have written on LinkedIn, and I saw some very good things which people have written on the risk profiling part of it. So now once you do all these things, the last thing which comes is the product. I think so. In today's session, I think we are trying to fit that part of it. So if you have some short-term goals, you have some mid-term goals, you have some long-term goals, right? So based on the goal, where you need what kind of things. Like for example, if it is a short-term goal, we are looking at debt because we don't want to take that kind of a risk. If it's a medium-term goal, maybe we are having a balanced approach, right, where we can have some equity, some debt. Vis-a-vis, again, if we have something which is a long-term goal, we are going all out and getting into more equity or higher equity, right? So product also, you are very, very clear now. Is there any doubt, or any of you have any doubt with respect to product part of it? Anyone? Okay, so I'm only seeing no, 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 so which is good, which is good. So none of you have any doubt. Okay, fantastic. All right.
Great.
So this is exactly what I wanted to see, guys. So I think that part is very, very clear. At least now you understand. If you have a short-term requirement, you are not going and buying equity thinking equity is at a discount. The probability of it is going high. Let me take a chance. No, that is not the way to do it. Okay. Even if equity is at a discount, if your requirement is for a short term, don't take that chance. Okay. Is that clear? All right. So if you look at this presentation, guys, here the activity what we are trying to tell you, this is the activity which I want all of you to do. So I think a part of it you have already done. All of you have already listed down your financial goals. All of you have already put their respective time horizon, right? Now what you need to do is, in the Excel sheet what you guys have already worked on, okay, now you start matching your goals with respective asset classes. Okay, so this is something which you have to do at your own end. You don't have to submit it in any Google Classroom. Okay, this is only for your own understanding. Is that clear? Because you already have all the data with respect to your own goals, because you have already done that. You already know what kind of time horizon it is required, to achieve those specific goals. Now you just need to attach respective product. Okay, if it's a short term, it has to be a debt product. If it is a medium term, it has to be a hybrid product. If it's a long term, then it can be an equity, right? So I think that is the exercise which you have to do at your end. Any doubt, guys, on this, on the task part of it? Again, I'm saying this task you do not have to submit. This you just have to do it and keep it to yourself. This is for your own clarity. No doubt. All of you are saying no doubt. Garima says, please explain. Okay, so task is very, very simple, guys. You just have to note down your own financial goals. Each of you have already written down your each of your financial goals. Okay, you also have broken that into short term, medium term, and long term. So you are writing against each of these goals. You are writing when it is supposed to be achieved. Is it 2 year, 5 year, 7 year, 10 year, whatever, right? So you write down that time horizon. Okay, and then you start assigning the goals to respective asset classes. So if you know if it is a short-term goal, get into a debt. I think there is some disturbance. 1 second, guys. 1 second. I think it is better now. Okay. So is that clear now? The task is you just need to write down your goals. You have to write the time horizon against each of these goals. You need to put asset classes. Okay, next to each of these goals you have to put asset classes where you're going to invest this. Is that clear? Sejal, is that clear to you? Great, great. Anyone else has any doubt with respect to the task part of it? I think 80% of your task is already done. All of you have already done this 80% of task. Some of you who did not get time or for whatever reason you are not able to do it, you can do it now. Okay, you have time till Monday for the next session to happen. Okay, so do the task and you can share your learning with whomever you want to. Okay, you don't have to submit this task in Google Classroom. This is only to be done at your end to have a better clarity. Yeah, so we are not uploading any task because we don't want you to submit that as an assignment. Okay, you are just supposed to do that task and keep it to yourself. Okay, if anyone has any doubt with respect to their task, can also reach out to their respective moderators. All right. So I think with this session I think we have reached almost a kind of a cycle where you have the foundation very, very clear. You are able to do your goal setting with clarity. Okay, you are able to reach those respective goals. You already have an SIP calculator in place where you are able to find what kind of SIP you need. Do I need to do a step up SIP to reach somewhere, right? If you're not able to reach in a standard SIPs, right? You also have done your risk assessment, so you understand your risk tolerance, you understand your risk ability, and you also understand the risk required. Is that clear, guys? All of you still here? Okay. Today we are talking about products. So what kind of product you should be buying in, okay, for each of these assets, for each of these goals, right? What kind of assets you need to be having for each of these goals. So if the goals are short term, you don't want to take any risk, so you buy into debt products. Which are debt products? Debt products could be fixed deposits, debt funds, corporate bonds, right? Even there are some NBFC who give deposit schemes, right? Debentures. Rinki says, right, bond debentures, yes. So they are debt product. Okay, where you are not running an equity kind of a risk. This is the money I put and this is the interest I get. Okay, so that is required for short term. Okay, now when it is a long term thing, sorry, when it is a medium term thing, you can have a mix of debt and equity. Okay, maybe you can have a balanced fund. Okay, but when it is a long term goal like 7+ year, you can buy into mutual funds. They can be a mix of large cap, mid cap, or it can be an index fund or whatever, right? So but it should be equity. Okay, so that you get benefit of the long term benefit by being in equity. Okay, so a lot of people uh, get into that kind of a product even if it is a long term. Okay, generally not advisable unless there's a specific requirement for something like that, where somebody is already retired and he wants a guaranteed income coming to him or her every month or every year, and they want to lock in a specific interest rate. Otherwise, for all of you who are young, who are starting their career, going to start their career, for all your long term goal, you need to be looking at equity as an asset class. Is that clear? So I think what we are going to talk about is that you need to have right asset for right goal. Okay, you need to have right asset for right goal. Okay, all right. So the takeaways, the key takeaways from this session is, guys, we have spoken about the 5 major asset classes. Okay, we spoke about equity, we spoke about debt, we spoke about gold, we also spoke about real estate and alternate assets. Okay, each of these asset classes have their own properties in terms of how they behave. Okay, and now all of you are very, very clear with respect to how each of these asset classes behave, right? So accordingly you can decide that for which goal what asset class suits. Do you have any doubt with respect to that, any of you? Now you will be able to understand, looking at your goal, what kind of asset class you should be investing in. On your chat, if it is clear, you can write clear. If you have any doubt, you can write the doubt so that I can read it. Clear, clear, clear. Aditya says clear, Tanu says clear, Anushka says clear. Fantastic. All clear. Okay. All right. All right. So now you are all aware of the task also, what you are supposed to do. Okay. So in this session also we spoke about the behavioral traps, right? Somebody says buy this stock, this is going to be fantastic. You sell everything and go blindly and over invest into one specific stock. Don't get into all those things, guys. Okay, don't get into some Lakshmi chit fund. Okay, just because you want to double your money in quicker time. Okay, you will always find some community friend coming to you and talk about this is a company based out of Dubai. They are investing and we are going to get the money doubled in 1 year. There are so many Ponzi schemes keep coming from time to time. Okay, so don't get into any of those things. You remember the thing like SLR. You remember what is SLR? Any investment comes to you, look at these 3 things: S, L, and R. So what is S? All of you. Safety. S is safety. Prashant. Okay, right. Safety. Then liquidity. Very good. Sejal says liquidity. All right. What is R? What is R? What is R? Regulated. Aditya says right. Aditya, you're right. Regulated. So the product has to be regulated. Okay. So it has to have the kind of safety you need. Okay. It needs to have the liquidity if required. And then it should be a regulated product. Okay. At least these 3 things you need to see in any investment opportunity coming your way. If one of those things are missing, then you are in problem. Okay.
Yeah,
Clear, guys?
Arunji,
Yeah.
I'll just interrupt here. I just
Yeah.
wanted to add one thing, that asset allocation is not just a strategy. It is
Hmm.
basically the foundation of disciplined and successful investing. So the right mix of all the product, equity, debt, and other asset classes can help balance risk and also provide stability and create a long-term wealth. So I think that is very, very important for all the individuals. So right from the
Very true.
students to the middle-aged person or anybody who is going to get retired, everybody needs to have a good mix of all this asset allocation product.
Is that clear, guys? Is that clear? Anyone has any question
Yes, I'll be
for
happy to
Disha
take
ma'am?
the question.
Yeah, she's more than happy to answer all your queries.
Also, I would encourage all of you to not look at the investments in isolation, but to focus on the overall structure of your portfolio. Because in the long run, it's not the timing the market, but how much time you are spending in the market is very, very important. So, supported by the right allocation, that truly makes the difference. So, this is one thing you all should be keeping in mind.
So till now, I was holding you all, that you should not go and talk to some customers and try to find out his about his goal, because first of all I want you to do this entire exercise for yourself. Okay, once you are very very clear of this process, you understand what is the outcome, desired outcome by each of these steps which you are taking. It is only after that I want you to go and interact with somebody outside, right? So there is one more thing which you can, which you all can do is talk about these things within your family. Okay, talk about these things within your family. Try and understand your family's financial goals. Okay, and see whether are they aligned with the respective timeline, right? With the present plan, what is there, are they able to achieve it whenever it is due? Okay, before you going out in the market and talking to somebody else, use it for yourself, use it within the family. You might get a lot of objections, right, which you otherwise will not be ready to face when you're going outside, right? So face all those objections within the family, see what is coming in. Okay, you all are free to connect with me. You can because now the weekend is there. Okay, I will be also willing to give you some additional time with respect to answering each of your queries on the WhatsApp thing which we have. Okay, so any questions you have, any queries you have, uh, make the best use of this weekend. Okay, and I will be more than happy to answer all of you. Okay, so so that you have absolute clarity with respect to your goal assignment and things like that. Is that good enough, guys? Is that good enough for all of you? Because whatever we have covered, I think today, at the end of 6 sessions, I think I want you to be prepared now to go and talk to anybody outside. Okay, and guys, understand, today maybe the industry is not functioning this way, but this is how it should function. Okay, so you guys do that steps, right? You talk about goals first, then you try to find out how to achieve them. Okay, let's not talk about products. Product comes at the end. Okay, first understand the goal and means to reach that goal. Is that clear? Is that clear? So no such task to be submitted and all that. I am trying to keep you all free. Okay, so that you are not running behind Google Classroom and trying to submit assignment. Okay, but I want you to do this assignment yourself, for yourself within your family. Now once you do it with your family, if some of you wants to share the experience of what you learned by discussing that with your family, you can share in LinkedIn, or whatever. You can write your own blog post and you can share with us, for all of us to read. And it's really encouraging, guys. You guys did the risk assessment, and all of you, I think a lot of you came and wrote about it in your LinkedIn. uh, Reading about it actually felt really good. Okay, so I want all of you, whatever you are learning, put that in practice. Okay, and share your learning. Okay, that is the encouragement which we get, right? For example, if I have to see motivation, I get motivated only if I see all of you sharing your learnings. Okay, so I think now I am able to identify by names some of you who have been very consistently talking about it, sharing it in the social media. Okay, and we have also a contest, which result I am going to declare on Monday. Okay, so make the best use of the social media, share your learnings. Okay, and we will have the clear winner being declared on the coming Monday. Okay, for that contest, where I want all of you to come on LinkedIn and share your learnings. Okay, guys, one thing I have, I don't see many people coming on Instagram. Okay, I am not an Instagram guy, but I think today we are living in the world which is a real kind of a world. I have not seen anybody coming and preparing a video and sharing with us. Can I have someone who can take this ownership of creating a video of whatever you are learned and share it with the world outside on Instagram, YouTube, Instagram, whatever? Okay, create a video, share it with us. Okay. Some of you are saying you can do on YouTube, no problem. No problem. Please create. Upasna is saying she can do it on YouTube, no problem. Guys, the moment you share your learnings, it also inspires somebody else to do it. Okay. So, it is, and I think, these days videos are doing a lot more thing than, whatever we do it on text, right? All right. Raghav also says he can do it on YouTube. No problem. Please prepare, your video. Okay. And I will share the link on YouTube. You can share also. You can tag us on YouTube. No problem. All right. So, guys, anyone of has any doubt? Otherwise, today we can end the session here. Okay. If anyone has any doubt, I am available. Disha ma'am is available for answering each of your queries. And feel free. I want to give you the time, to reply to each of your queries this weekend. Okay.
And if you don't have any question right now, just take time, interact with your near family members, and then after, if you have any doubts, you can still reach out to me or Arun or anybody else, your mentors or anyone. We all are there to help you.
And please go to LinkedIn. Okay, I have shared the link with all of you. You can also connect with ma'am. You can also connect with Disha ma'am, and she is more than happy to help each of you. Okay.
Absolutely. So, thank you everyone for your time, and I hope this session added value to your investing journey. And because ultimately, successful investing is not about picking winners, but also about building a winning allocation. So, let's build the healthy allocation from each one of you. Thank
I
you so
would like
much, Arun, once again for providing me this opportunity to interact with this bunch of wonderful people. And I'm really happy for coming for such sessions again and again. Looking forward to it. Thank you so much.
thank you so much. Thank you so much, Disha ji. Thank you so much for coming over here and giving your valuable insights to all the participant over here. I look forward to your support, for further programs which we are going to do for them. Thank you. Thank you, all of you.